You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskins, your host. As always, Brendon Ptolomey is back in the studio to assist us with our quarterly regional update. And we're going to get straight into it, Brendo. How you going?
Yeah, I'm good, Trent. Thanks for having me in. I really like this part of making the pod because I get to cast around to all of our Heron to White valuers across the state and just check in with them and see what's happening in their marketplace. And as you know from doing quarterly updates, things can really change from one quarter to the next in some of these locations. And, you know, there's world economic events affecting some of these markets, and so
commodities a big part of a lot of these towns.
Absolutely. So we'll touch on a couple of them, but clearly the lithium market has been a significant story across WA, in particular affecting some share prices.
Live exports as well.
Live exports is in there, Cal and the gold price, and then you flip over the other side of that metric and it's nickel out there. Really interesting for Cal from that point of view.
But let's start in Bunbury, hey?
The feedback from our valuers down there is that the Kemerton and lithium story is actually affecting things. So essentially Greenbushes, I read recently, we already know that it's the biggest hard rock lithium mine in the world.
It's the most profitable.
And it's the most profitable. How's that? So whilst the rest of the world are looking at each other going, how do we do this? Albemarle down there are sitting there going, it's okay, we got this covered because our production cost is lower than everybody else, essentially. I think it goes to, I obviously have no idea about mining really or engineering, but I think it goes to the way the product comes out of the ground and the way that it gets broken up and shipped off, essentially.
A big part of it is the fact that historically that mine down there, and I recommend everyone go down to Greenbushes one day and check it out. It's really cool. You can see it as a viewing platform. The historics of Greenbushes, what is that? It's a tin and I believe tantalum mine.
Correct.
Back in the day. Lithium was just refuse.
Yep.
So what they did was they had mountains worth of lithium-filled soil sitting there, already mined, because they'd already picked up the rest of the stuff they wanted that was worth money back in the day.
Yep.
So all the lithium they're grabbing now, it's so cheap because it's literally just sitting there from the work done 100 years ago.
Yeah. That's an amazing concept.
And that's how it's so cheap.
Yeah. And, you know, you hear those stories in the gold mining industry where they go back and analyse what's in the tailings and work out that they can process a whole lot more gold out of what they threw out previously.
Or
it's really
silver, copper, always extras,
Yeah, so median house price down so this is a southwest data point, is now $570,000. This is REWA numbers, up from $374,000 in 2019. So I just wanted to get that perspective there. 52% increase over that period of time, over the last 5 years or so. This is not dissimilar to a Perth Metro story in that listings are still really low, but how's this? They bottomed out at 498 and they're now back up to 562. So bottomed out in August at 498. They're back up to 562 at this point in time. But let's just think about May 2019, back to that data point of the previous median house price. Listings back then were 2,046. So we're still a quarter of the volume that we need in the supply side of the equation. Some interesting things going on from a price point of view. So again, in the main podcast on Perth Metro, we talked about outlying areas being the places that will suffer on value quickest
because they have the least amenity.
Yeah, and they have peaked out at a value proposition, and that's happening around the Bunbury area. So sections of the lower end of Bunbury, like Carey Park, and that type of situation where the housing stock doesn't quite support investor activity. By that I mean there's older 3-bedroom, 1-bathroom homes that have a limited rental value to them. So essentially investors are saying, hang on, why would I spend my money in there? I'll go somewhere else. That other place they might go to is Dalyella at the southern end of Bunbury there. But again, that becomes a price point where more modern stock, 4-bedroom, 2-bathroom houses, but a bit more supply coming to the market and not downward pressure on market, but essentially levelling of values through that location at this point in time. East Coast and buyers are very much drying up through that the Bunbury location, and that would filter down into Busselton, and I'm not sure that they're very active in Dunsborough. So a levelling off of the market a little bit in Bunbury, essentially because it's reached a price point and an affordability point, but let's just be really clear, it's not going backwards. And if you live in that location and are looking for opportunities, this means that the opportunities are coming essentially just because supply has gone up slightly.
What it sounds like is a very similar story to Perth.
Yes, essentially it's some different price points. Really interesting to hear from our valuers on the ground down there that essentially the rental market is capping out in some of these locations. So if you go to Busso and Broadwater, if we go south of Bunbury, essentially Busselton peaking out at some rents through there that are sitting around about $620 a week. Some prospects in there in terms of value. So if you're looking around in Bunbury, Busselton at about the $800,000 mark, everyone's now starting to look at the lifestyle opportunities. Do I get a slightly larger block on the edge of town? Maybe what you can convince yourself might be a kind of hobby farm or rural res type opportunity. That's really interesting in terms of that market having a lot of value pressure on it. And that's not dissimilar to what we talked about in Perth in terms of moving from a outer suburb to maybe a more desirable suburb. Interesting to look at those numbers down into entry-level Dunsborough. So I just had a quick look at properties on the market in Dunsborough. There's only 47 listings available at this point in time. Entry-level there sits at about $850,000 and rents are capping out, but they're higher than Perth. So they're $800 a week for a 4x2 in Dunsborough. So there's
what does that talk to the socio-demographics of people who live in Dunsborough these days? Is it a mini Byron Bay?
Yeah. Well, it's a really interesting market to try and dissect. So there's a lot of locals down there that have been there for a while and probably taken the opportunity to consolidate into some pretty expensive property. It doesn't seem to have an affordability pressure that lots of other economies do. So it just doesn't have that mix of socio-economic differentiation between the bottom and the top. And so as a result, its medians and its averages look really high. And it's an expensive place to get into because there's a limited supply of everything. Doesn't matter what you look at in there. If you're looking for a small unit through to a luxury property on the side of the hill trying to get views of Geograph Bay, all of it is expensive and all of it is undersupplied.
So what you're saying is we don't really have much of a lower class in Dunsborough. We have a middle class and an upper class.
Diplomatically, I'm trying to get to that point,
yep.
Trent. Yeah, and then another price point in there, interestingly, is that land is really sought after. If you drop off the bottom end of Busselton and through Vass Newtown and into Dunsborough, there's a massive undersupply of land opportunity in there. Obviously, the market, as it did in Perth, has gone to that opportunity. I can't buy an established house. I can't afford it. I'll go and buy a block of land and try and build. Still a massive amount of price pressure there and values going up quite rapidly in the vacant land space. And then lifestyle residential. So rural res actually is about a $1.3 million starting range in that location. So
crazy to think.
Yeah, they're big numbers, right, for a regional
let's
location.
Think about $1.3 million in Perth.
Yep.
So at that price point on, 500 square metres?
Yep.
You're looking at Karrinyup, Corrine, up sort of area.
Yeah, and you're getting further out of the city all the time. So if you go south the river, that would have been places like Bull Creek, those types of locations. We're now seeing that be the middle of the range in terms of value through there. So yeah, it's really interesting. But you would be on, as you are suggesting, you'll be in a 2-story house. Certainly in Bull Creek, you'd be on a 2-story house on a subdivided lot. Yeah.
Well, I think you're more like Rossmoy and Riverton,
yep,
south the river as well. So it does talk to the fact that people who live down there or prefer to, and I would say a lot of them are second houses as well down there. Less price sensitive.
Yeah, and recently had a long weekend down there, and pretty interesting that it still just gets so busy anytime that school holidays, long weekends, that kind of stuff are on.
As you spoke to, it's getting better to be there. There are more amenities. It's getting easier to drive down there with the highway being improved every few years. It makes it easier to enjoy living there.
The other part to remember here is the really important pieces of infrastructure that underpin people's decisions to stay or go from some regional locations. Those problems are continuing to get solved down there. So in particular, think about schooling. If you live in the north of the state, and indeed in lots of regional locations around the country, a main reason for moving would be education, whereas the Dunsborough-Busselton location actually solves a lot of those problems and can sustain people through upper primary school and into high school. And clearly they then have to leave town if they want a tertiary education.
Where are we going next?
Yeah, if we work down into Albany and Denmark, still a lot of pressure on down there. So essentially land values have increased notably. What we're seeing here, and we're seeing this in Perth, and I just alluded to it in Vass, developers that have any land available will be essentially restricting their supply into the marketplace. Sometimes that's really legitimate in that they can't get the blocks produced, they can't get power domes on there, they can't get infrastructure built.
Civil contractors, guys with tractors.
Can't get the road built. And sometimes it's just simply market dynamics. I've been waiting for values to go up. I've been sitting on my investment for a period of time. I can see that if I hold back supply a little bit, I can put a little bit of price pressure on. So that's happening in places like Albany still, and in particular at 3 Vass as well. Everything is still selling really quickly through Albany and Denmark. We get back to those really simple fundamentals, demand and supply. So if you're going shopping for a decent quality property to live in, as in owner-occupier type property in those locations, then it's going to take a little bit of searching because the product you're looking for isn't readily available. And then you've got the next part of the pressure. People still want to look for a holiday home out of Perth. And I think we're still surprised in our office how frequently people are still out there looking through that southwest Albany, Denmark region as well, and the Great Southern, for their lifestyle / bolt hole / holiday home / weekender.
Well, we talk about people upgrading with their equity that they've created over the last couple of years. We probably haven't thought about what if they use that equity to buy a holiday home.
Absolutely. And so that's definitely happening. It's not a rush. It's not a huge trend where every agent would be saying this is happening to me daily, but it's just happening slowly as people come out of post-COVID. They've done their overseas holiday. They've probably consolidated some finances and can convince themselves the world's going to be okay. And they'll look around and go, you know what, I don't need to go on the overseas holiday every year, or I've done that, I've been through Europe. Where's my next stage in this property cycle? I'm okay where I am in Perth, created equity, I'm going to go spend the equity somewhere else. And it can be as simple as a unit in the southwest or in Albany, but often people are looking for something a little bit more exciting.
Well, it's a symptom, an outcome that we haven't witnessed for a decade.
Yep.
Is what do people do when the wealth effect starts to come in again? And it's the first time over the last couple of years where people look at their values and go, Jesus, I've got $300,000 in equity sitting there. What do I do with it?
Yeah.
And we really, I don't think, have considered that. They're not all going to upgrade or downgrade with it. They're going to go and fulfill those life goals and go down south.
Yeah. And that goes back to talk about this in the Perth Metro update, but essentially we're creating a significant amount of wealth in this uptick in this cycle. And so therefore the cost of living pressure is nowhere near as severe in Perth as it is indeed across Western Australia, as it is potentially on the East Coast.
Up to Cal?
Yeah, Trent, Kalgoorlie is really interesting at this point in time. So we talked at the top here about world economy. So you've got a record gold price going on, and anyone you would talk to property in Kalgoorlie was always like, it just follows the gold price. And so here we are again, but there's this enormous shock going on in terms of the nickel market, and any other country town, you would be really concerned about that local economy impact. It's a risk rating that goes on a valuation report that we deliver to the bank and we talk to. Is there a risk that one economic driver leaves a country town like Kalgoorlie and the property market collapses? That's what the bank wants to know from us as valuers. And so interestingly, whilst that nickel story is going, the gold story is going completely the other direction. And let's not forget that Lynas have a rare earths plant out there that they are investing in significant amount of money. And then again, we get into this massive geopolitical situation around the world where literally in the last couple of weeks, we've had all of the largest Western economies talking about where they're going to get their rare earth supply from. There's Lynas sitting out there in Kalgoorlie, the centre of the universe, it would seem. So, interesting.
Middle of nowhere at the same time.
Yes, lucky they've got some water that got piped out there years ago. But so really interesting, the owner-occupier type level of product sits at $700,000 now through Cal. So that's
mental.
Well, number one, it's really full on in terms of a number. Entry level as another data point, because it has some really cheap housing stock in Kalgoorlie and some relatively expensive stock and an undersupply of that expensive stock. But entry level can be as low as $275K. So lots of little units and old kind of miners' shacks and really diverse range of construction sites and quality of housing through Cal.
And to juxtapose this to a Dunsborough, you do have quite a bit of low socioeconomic stuff in Kalgoorlie, don't you?
Yeah, and just a really long history of people moving to the town and different types of construction going on and different locations in terms of the suburbs within Cal. Interestingly, the median house price actually sits around the $350K, and that's up by 7.5% in the last month or so. Median rents are sitting around the $565 mark. Interesting that there's a lot of pressure on that rental side of things in terms of people living locally. So people making decisions about whether they stay or go in town. They can't afford that $700,000 nice house in terms of an owner-occupier. Rents are getting a bit edgy. How's the share house situation looking? That kind of scenario. In terms of investors buying into Cal, it still looks relatively attractive in terms of what those yields are. So for some of those units and miners' cottages at the lower end of the value range, returns can be as much as 10%. Houses are sitting more like 8 to 9%. So you can see that the risk of going to a country town, a town that's intrinsically linked to the international economy, your yield goes up slightly because you're taking that risk. But again, you can look at an affordability side of things. So if the owner-occupier level of entry is at 700K, that's essentially what you're buying in at for the lower level of value proposition in, say, a Perth metro area. So there is definitely an opportunity there in terms of price point.
It's not surprising given the amount of investment that's going on because of where that gold price is at. We're not only at record levels in US dollars, but when you factor in our fairly weak Australian dollar, you multiply that out by 0.65, and the money that the super pit's making right now is being pushed out to the rest of the economy.
It's quite amazing to see that activity tick up. Interestingly, our local valuer was out there, went out to Southern Cross as well in the last week or so. Bit of purchase activity happening there, relatively cheap in relation to Kalgoorlie. From his observation, some old gold mines being essentially pulled out of mothballs and starting to operate again. So you can see that the workers will be attracted to Southern Cross. They'll be looking for cheap accommodation, get operational again. So
it's a great time to be owning a marginal mine shaft, isn't it? You get out there with a little bit of equipment and make a quick buck.
There's a lot of engineers that would have been sitting around trying to work out how they get that processing cost or production cost a lot lower. Maybe they've worked that out over the last 4 or 5 years, but then obviously they've got the supply side in terms of price going up on the gold side.
Hey, you like talking about Geraldton these days. Where are we at with it?
Yes, here we go. Back into Gero Trent, and our valuer that's on the ground up there is telling us that the market's still really strong. Listings are tight and sales days on market are essentially low across the board.
Do we have a why?
There's still a little bit of investor activity going on there, a fair bit of upgrade going on from locals. And essentially what we're seeing here is Gero's lagging what's happening in Perth, Southwest, rest of WA in terms of people coming to that market a little bit later and also having their little aha moment. Whether you live there or you're investing there, you've probably taken a little time to come around to the idea that the market's moving. In particular, locals in Gero are probably sitting there going, I really need some proof that this market's moving before I spend some more money.
Probably also that practical outcome we keep going back to is they're probably only just getting the equity they need to make that decision even if they wanted to earlier.
Yeah, absolutely. And then as a vendor, there's lots and lots of sales going on where the asking price is 5 to 10% above the asking price with multiple offers.
So minimal discounting.
Yeah, minimal discounting. Rental availability is really tight, 1 to 2% vacancy rate. And those rents sit in a range of about $500 to $700 a week. Entry point values in terms of what investors might look at to get into Gero. So Spalding is about $350,000, Rangeway sitting at about $450K. And interestingly, in terms of market cycle, there actually are still a few MIPs, mortgagee and possession type properties still around in Geraldton. So those properties will have become available mainly because of socioeconomic conditions. So, relations split up or unemployment or something going wrong with family units income, something like that. And that causes there to be distressed asset availability, which I'm pretty sure we could go across the rest of WA market and not find too many of those available. So
that is a broader story for Perth and Western Australia right now is we pretty much lead the nation in minimal MIPs, don't we?
Yeah,
We've got the best MIP situation.
Yeah, absolutely. And one of our customers is Keystart that we do valuations for at Heron to White. And I talk to them. I can't tell you their stats, but I can tell you that they're substantially lower than they have ever been in terms of their mortgagee and possession activity in their loan book at this point in time. And really encouraging because that means their customers are all succeeding on their journey in terms of first home buyers, paying off their mortgage and essentially refinancing into maybe a cheaper home loan.
Well, you're only as good as your weakest link, right? And I've always looked to the mortgagee and possession stat as that weakest link analog, and to know that it's as good as it's ever been in WA and it's as good as it is around the country, just talks to the strength of the bottom of our market. The weakest link in our market is stronger than the weakest link anywhere else in the country.
Yeah, absolutely. Back on to Gero, the vacant land story is also still active there. So we talked about that in the southwest. So what's happening now in Geraldton is upgrade buyers probably going to buy that nice block of land that they've always had their eye on, maybe closer to the coast or a little bit of a view or slightly north of town. There's some amazing beaches there.
The dream home
situation, as well as then first home buyers or locals getting into the market going, right, I don't like any of the stock that's available. I'll just do this myself and it's a cheaper way into the market. I don't have to go buy an established dwelling that I don't like. I'll go and buy a block of land and build the house that I do like.
And that is that story in Perth right now. Definitely it has become the story story in the last 12 months, really. People either giving up on the established market or just seeing price parity and going, I'm going to control my outcomes here.
Yeah, and so the other part there, just to finish off on investors, so East Coast investors slightly less active. That's probably just driven a little bit by the fact that they're exiting WA because of the buyer agents probably seeing us as less attractive, in particular the ones that are based on the East Coast and don't come and look around. But I would expect that there's still some really good opportunities in terms of investment in Gero and really good opportunity from a yield point of view too.
Very good to hear. Let's go to Karratha.
Karratha's really interesting at this point in time. Investors are just coming back to that market. So again, we start talking about that yield side of things. So if interest rates go down, let's not forget the idea that the return that you get on your cash sitting in the bank goes down as well. And so there's a certain portion of the population that now come back to the market looking for some sort of yield, and they might look at the yields through Karratha that can be over 10%. They can be up as high as 12% and essentially start searching for that yield. What we've got in terms of a purchase situation at Karratha at the minute is actually a little bit of opportunity, i.e. there is some supply to choose from, and the fact that there's not purchase on purchase activity or transaction on transaction pressure on prices. So we just talked about that in Gero, where we're talking 5 to 10% above asking price. That's not the case in Karratha. You can probably go and see a listing at X price, let's just call it $750,000, and roll up to buy that property and have a good chance of getting it very close to that price. So not a lot of outbidding happening in terms of purchases in Karratha at this point in time. A little bit of activity from locals consolidating, finding the desired house, that kind of thing.
So just a very stable market right
and
now.
Relatively,
not a lot to see here.
Yeah, relatively stable. An interesting point that Mel, our valuer in Karratha, makes, and that is that rents have stabilised. So that means the market just stabilises a little bit around it. Yeah.
But it probably talks to where we're at in the iron ore market as well, in that we're seeing a bit of a plateau, a bit of a floor, a bit of a stabilisation at that sub 100 per tonne space, somewhere between 80 and 100. We're not seeing those super profits anymore. We're not seeing new mines opening up because of the super profit space. Those marginals are closing around the world. So it's probably a consolidation time for Karratha as a derivative of it being a consolidation in the iron ore market as well.
Yes. And let's just remember that there's a real floor of $90 a tonne on that iron ore price, and we've been through that pressure on downside, and it's flattened out and come back again. Really interesting to watch the share market get really excited when the China announced some stimulus. I'm just fascinated about how quickly those reactions can happen and how positive the sentiment can be. I think we've got to wait to see how that plays out a little bit, but it probably does restore a little bit of confidence or take away the doubt that was creeping in around that iron ore price.
Well, it talks to the story of the last probably year and a half here, where everyone's been sitting there waiting for the government to bail themselves out or bail the real estate industry out, and they weren't going to, but to be able to probably just draw a line in the sand and say, yeah, this is as far as we're going to let you slide. We will support you, and we still want an industry.
Yeah.
It's probably enough for the market to recognise and go, hey, they're not crazy.
Yes.
We are going to have a future.
Yeah, absolutely. Now, the other thing we need to remember about Karratha is that there's actually quite a bit of decent investment happening in there. So the operators that have been in that location, let's remember that it's an oil and gas town as well in terms of Woodside, they actually have come to market and said, we've analysed what we need to do from a long-term accommodation point of view. We're trying to house more of our staff here, more of our families that work for us here, and they are undertaking to build large amounts of new housing. When I talk about large amounts, I'm talking kind of 30, 40, 50 new houses. So there is some supply coming here.
Madison.
There. What happens there is it's not dissimilar to the Perth market. It's required supply. The town needs more housing. That's why it goes up in value so dramatically when there's any accommodation pressure put on it. And essentially, it's a good thing to see that essentially everyone stood back from the construction cost increase post-COVID and said, okay, construction costs are leveled out. We need to bite the bullet and go in there and build these new houses at this price.
Look, we were talking about this years ago, and it sounds like we're finally getting to that price parity where it makes sense to say, hey, we need to add one more piece of supply here.
And importantly, the state government have invested a lot of money in terms of making that land supply available up there as well.
Let's finalise this chat in Hedland.
Yeah, so South Hedland, here's a professional term for you from my valuer in the Pilbara. It's going off at the minute in South Hedland.
Technical term.
Yes, very technical term. So investors really active in there. Price point is essentially anything under $500,000. It's really interesting to see that the market's searching for a price point here. Again, I'd expect those yields to be, depending on what you're buying and the quality of the house, could be as low as 6%, which wouldn't be a great yield for that location, but it could be as high as double that, could be 12%. I'd always caution, as we have done in the past, just be careful buying strata title property in the Pilbara locations, and this goes for anywhere in the north of Australia. Insurance costs are severe. Any cyclone rated locations in Australia will have very exy insurance costs.
They're chipping a couple of % off the yield.
Yeah, absolutely. And so really active in South Hedland. Port Hedland is still increasing in value. Obviously, there's always a restriction on the amount of supply there. The state government and the port have a buyback scheme going in terms of taking out the houses that are closest to the port and rezoning that location. So essentially supply reducing over a long period of time. We're talking about price points there at more like $600,000 to $700,000. Some investors also, if you're selling out of South Hedland and you live in Hedland, then you're probably trying to be aspirational and move to Port Hedland and secure your property there.
Brendo, sounds like a pretty positive chat all round when you think about the regional market in Perth, whether you're south, you're east, or you're north, and tracking Perth in the most part as well. So be interesting to hear after Christmas where we're sitting with some of those dynamics.
Yeah, and I think, Trent, the summary here is to just think through what's happening with the West Australian economy. When we have, in particular, buyer agents that might not be located in Western Australia starting to talk about whether the values of our properties across all of WA are going to go down, and we go through what we've just talked about here, we've got on-the-ground evidence that all of those locations, Perth Metro right through all of the regions, still have some pretty significant price pressure and essentially a well-employed marketplace, which means that people can afford to buy a house and put pressure on the supply side.
Most incomes, strongest economy, least supply, least mortgagee in possession.
Yep.
That's all we need to say, really.
Pretty strong fundamentals. Thanks, Trent.
Thanks, Brendon.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!